And welcome back, my dear friends. Morpheus in the house once again with you, trying to give you the red pill. The truth about trading is in effect. Yes, you can make money. Yes, you can do this from anywhere in the world. Yes, this is risky, but yes, this also has the most, probably unmatched kind of profit potential. Today, my dear friends, well, rather, actually, we're going to build on today on what we've discussed yesterday. Yesterday, we've discussed stop loss, basically a certain point where you should consider stopping and waiting for maybe a better confirmation for a signal. Today we're going to look at actual certain statistics and numbers that are involved with this. Most people think that successful trading, you need high success rate, 80, 70. Anytime I talk to a new person, I say, what out of 100, how many trades do you need to be in the money? They usually say like 80, 90, maybe sometimes even higher, but we understand that this is not the case. That's why I am your loyal, truth revealer. And I'm telling you that no, you don't need ideal statistics. No, you need to be in profit every single day to make money, and actually good money at that. And today we're going to kind of show you some statistics that are involved with that. All right, so let's kind of take a look. Once again, we've got, chats are open, my dear friends, man. I'm always so happy and excited when my friends Donald and Henry, my boys, are in the house. They're with me, but these guys are already not just random viewers. We've talked on Telegram channel one on one. We've delved into essentially a little bit deeper into certain strategies, into certain ways of thinking, into certain approaches to trading, because there is not one way to skin the cat. I can tell you about multiple ways to open positions, and this is something that depends upon you, which ones you want to choose. So, anyways, but just know chats are open right now. So if you are a random person coming, kind of flicked on stream, we've got the truth about investing with binary options. I'm not selling a trick. I am trying to give you knowledge overall to learn the rules that govern this system, so that you can make money stable, and without, kind of illusions. Right? So today's topic essentially revolves around the fact that what can you ask from this instrument? Right? We need to, and actually let's kind of switch over to our platform, Pocket Option platform. I love this platform because they pay out profits without any kind of difficulties. We're looking usually at euro dollar OTC. Well, no. I like euro dollar OTC. When I see it here, it makes me feel comfortable. That's all. It's just my preference. Now, today though, we are going to spend a little bit of time not really here, but understanding how here this is the factor that kind of tells you, well, essentially the how do you really phrase it? This is what's responsible for your profitability, right? See, everybody thinks that it's about here, every single trade, or maybe 80% of these have to be successful. No, they don't. Right? No, they don't. The money you're going to be making, it's actually mostly about understanding how to properly invest into your into these positions according to your particular money management. So having said that, let me see. One second. Uh, there we go. And first, I want to start with this table. All right, this is kind of important aspect. What you can see is that we have, this is just for me. This is something that I have. Actually, Donald and Henry have this as well. And let me explain. I usually tell people, hey, you know what? We need to understand your statistics throughout the day. How many trades do you need in order to be in profit, right? And that's exactly what I encourage you to do, these kind of tables, to understand what kind of success rate you have. So this 1 through, essentially infinity, this is where we mark a particular trading session. So if you open a position, you don't even need to actually write down the amount, but just to see if it was not in the money, you put a little X. It was not second attempt, right? Out of the first winning trade, you got it, for example, on the third. There's a check mark, right? So you go to the second one, and then you're like, oh, I won this one on the second. I won this one on the first. And what happens is that out of 1, 2, 3, 4, 5 trades, you've gotten, essentially all of them winning within the first 3 tries. So then we understand about martingale, right? If we change this to like 1.5, standard martingale is actually 2. So it goes 1, 2, 6, 18, 54. Man, that's very aggressive. If you have a $100 balance, you're essentially hitting, $81 in 5 trades. See, that's kind of aggressive, and that means that if you're, setting up this, right here sets it up as a 10% loss from your 100s. Essentially, you have 3 trades, 3 tries to get into the money before you lose, which is essentially something that pretty much amounts to 10% of your balance, right? But if you got balance a little bit bigger, you already have essentially 4 steps before you go with the standard martingale. But if you set it up for like 1.5, you actually get 5 steps martingale, and you can lose, right, with a 500 balance, you can lose 5 times in a row before you are threatening 10%, which actually here is $39. So that means that maybe here you can start with $1.20, because 10% is 50, maybe even $1.25. Let's see. There we go, right? Pretty damn close. So you'll have 5 tries with 92% return on investment, and you see that, hey, right, essentially 100%, right, if we remove, the same sum like this, 100% of winning is done within the first 3 tries. But obviously at some point you're going to go here to, too many. There we go, an X, right, an X, and then you'll have like a V. And then when you go through this, right, we'll understand at some point, right, there we go, the trading session is over, and you write how many winning trades was here, how many winning trades was here, how many winning trades was here, and how many trades were here. And essentially you'll get a number. And this is the beautiful part about this, because now if we go to a different chart, this is where, this is one of my, my favorite chart. But check it out, right? So let's say that you have and I kind of did this with one of my guys, one of my students, directly, live in the previous, just before this. But if we shoot for 10%, let's go here, 10% per day, right? We understand that you'll be looking, right? So let's say $500 starting balance, 10% per day. 10% per day. What is 10%? 10% is 1% of your balance, right? So if you have, let's say, $500, well, you would need to open the first position at $5. Technically, you would need to have like 12 winning positions at 92% return on investment. You would need to have about 12 first-time wins to get into, right, to get your 10%, to get your profit, right? So how many positions? You have about 12 positions. But what if you get on the second position? See, this is where I got it. There we go. Wait 1 second. All right, so let's assume, right, you're going to start with $5. At 92, at 92% return on investment, we're looking at $4.60, right? So $4.60 times 10, $46. Essentially, you would need, like, a little over 12. So essentially, let's round it up to 13 positions. But look, this is where you would get it. But what if all of the winning is done with like a multiplier like 1.6? The next position would be $7, right? That means that you would win $6.44, but minus $5 that you've lost previous. So you would actually have 144 of profit in if you win on the second. So to make 50, obviously you would need to open like so here would be like 13 trades. But here, to get 10%, but here it would have been like 40, 40 plus, let's say like 45, right? At 144, right? Or a little bit less, but let's just assume. So you understand, but here it's going to be 235. Yet again, 50 divided by 235 would be around like 25 trades, right? Let's just kind of maybe like, or we just, for hypothetical purposes, we just to understand that if all of your trades are done within the first three steps of martingale, right, with something, with a very, kind of conservative multiplier. Let's actually, say, let's do that, right? Two, there we go. Two, there we go. Two, there we go. Right, so standard martingale goes 5, 10, 30, 90, right? So in this case, obviously statistics change a little bit, so now it would be 420, not 460, right? So 420 with the 5 multiplier. Here it would have been 760. So on the third one, let's actually take $50. 1 second. So $50, we're going to divide that by 4.6, to get the more realistic numbers. Okay, so here, yeah, not 13. We're talking actually about 11, right? There we go, 11 trades. Since the profitability will be a little bit lower on this, so we take $50 and we divide it by, 420. In this case, it would have been 12 trades, right? 12 trades. And to get your 10%. And, in this case, we got what? 760. So 50, when we divide it by 760, we're getting 6.6, right? So let's just round it up to 7 trades. Right now, so 7 trades. This is where we need to kind of understand how often do you get your signals. All right, so if we're looking at the previous chart and you understand that every single minute that you trade, essentially you will need like 12, maybe, let's say, round it up a little bit, 15 minutes to hit your 10% if you open a position starting with $1. Or, I'm sorry, starting with 1% of your balance. If you have $500, opening a $5 position with the multiplier of 2 is actually very, very aggressive. You see, because if you have $500, we're looking at 5 steps, right? 5 steps of martingale before you're essentially, risking like 80% of that. Right? So you can't even double that anymore. At this point, you might as well go all in, not 270, but whatever is left over of your like 230. In addition, right? So like 370 to a little bit less than 370, 365 to open here. Might as well. It's not going to matter. You're not going to go back to $5 trades, but this is very, very pressuring because yes, if you're following certain approaches when you're trading with 1 minute candles, trend is your friend, like I've been showing you. This is just extreme. So that's why I usually say, hey, let's kind of tone down the risk level by applying the multiplier a little bit less, right? Like 1.5, which means that you're actually opening a 6-step martingale before you're risking 475, right? So 5, 750, and this is where $5 as a starting point, 1% sometimes is actually a little aggressive as well. So I might have, going with a half as much. So now $500 is, you see, you got 7 or 6-step martingale, but you're risking 237, right? So you can adjust these things a little bit to fit your statistics. All right, if 100% of your winning is done in the first 3 trades, well, I don't think that is ever going to be 100, but let's say like 90 or 80. Man, you really don't want to go to the 4th step. Right? Actually, I wouldn't even say like go to the 3rd step. Donald and Henry, we discussed this actually many times. So, anyways, coming back to what we're discussing, this is so important, my dear friends, to understand what you can ask from this instrument. And what you can ask from this instrument is a particular growth. If we're aiming for 10%, $500 becomes $8,224 worth of profit. That's incredible. That's why this is actually something that sounds too good to be true. But understand something, that trading every single day, even if we, understand that we need maybe a little bit aggressive trading, we would need like 15 minutes. All right. But obviously would be with like 1% of the trading volume and with the multiplier that's very aggressive. All right. So in this case, yes, you would get this within like 15 minutes. But maybe you want to give yourself a little bit more time. And instead of 50 minutes, you double that to half an hour. Because based on the signals, the winnings of getting your 10% per day would increase. But this is also depends on how you trade. Do you trade every single minute? Or do you get like 4 signals per hour? If you get 4 signals per hour, depending on your success rate, yeah, you would need to massage these numbers to be a little bit more aggressive, because it would take you like 5, 6 hours to get your 10% when you're doing it like this. So this is why, my dear friends, actually, let me, make sure you see my, make sure you see my mask and how serious I am. This is why I always say, my dear friends, I'm not selling a trick. I'm not selling that one thing that will, fit somebody. We're trying to get, me and my team, we're trying to get to you information, a broad information, the rules that govern this system, so that you can understand what fits you best. If you're expecting that your $500 will turn into 5,000 in like a matter of couple of trades, you're not trading. You're not investing. You're gambling. You're playing casino. The hard truth, the red pill, my friends, that's what this is. However, if we're discussing that you're trading based on numbers, math, statistics, you need to understand what fits you based on your statistics. How do you trade? Write this in the comments right now, or in the chat right now, or in the comments later. I'll personally answer. You can go to Telegram channel and discuss this with me one-on-one. You're not going to be talking to a bot. I'm going to give you full answers that are based on logic, math, statistics. You never need to trust me, but you'll understand. I've been doing this for such a long time. I've talked to thousands of traders since 2012. I talked one-on-one with VIPs, with very, very affluent people, with very rich, with very poor, different experiences. I can pass along this information, their experience and my experience, to you. So sign up, or kind of visit our Telegram channel, drop a comment. Very soon, my team and I, we're going to be doing certain raffles in there. So this is something that's going to be, also kind of entertaining and exciting to be part of as well. But let's come back to the topic again. Numbers. This is what determines how risky you're able to, to go. And also what you can expect from this instrument, factoring in the most important thing about trading is factoring the time. Do you want $5,000 of profit per day? Man, that's not a problem when you have like $100,000 balance. All right, so you can still do that 5K a day. What is that? That's 5%, right? Investing, maybe even like less than, investing 0.5% for about half an hour worth of trading, you can get your 5K. All right, but this is not something that's going to happen overnight. Your $500 investment, you need to understand, what kind of risk you're opening it to. If you're expecting your 500 to turn into 100K in a day, you're not trading, you're not investing, you're gambling. All right, so factor in time, and this is where I like this sheet right here. So, $500, right? If you're aiming at 10%, but understand that you're not going to trade every single day. All right, let's be realistic. Yes, you can force yourself, for a particular month to trade every single day, but that's forcing. Forcing is never really good. It's not something that's going to work long term for you to force something that's not habitual to you. Right? So let's assume that out of a 30-day month, you're trading only for 25 days. Your $500 becomes, well, essentially, it's also calculating from the previous balance to the last. Maybe you're not going to trade here. Maybe you're not going to trade here. Maybe you're not going to trade here. So your profit's still going to be, quite heavy, bigger than even what we're seeing right now. But once again, we're looking at 4,900. Let's say just round it up to $5,000 profit, 1,000% growth. Who the hell is not going to be happy with that, right? But let's also take another, bit of a red pill and understand you're not going to trade into profit every single day. So instead of making 10%, you lose 10%, right? So we're kind of going to go like this: 1 day, 2 day, 3 day, 4 day, 5 days, right? So here, we're not even going to make, we're not even going to make, um, there we go, profit every single day. So your $500 becomes 1,500. A profit, right? So 2,088. Man, that still sounds amazing, but and understand that somewhere here you'll make like 2%. Here you'll make like I don't know, 7%. Here you'll make 25%. So it will kind of equal out, right? And still, it's still going to give you something incredible, right? About 1,500 profit. What if you withdraw that particular day, right? You deposited 500, your balance turned to damn near 2,000, and you withdrew 500. So that means that your starting balance for the following month is 1,500, and we repeat the same statistic. Out of a month, you're not trading every single day. You get you give your girlfriend, your mom, some quality time, right? Your family, your friends, you give them quality time. They're part of your team. They're the ones that are responsible for your psychological calm, right? So, but then look, we got 1,500 turning into 5,792, right? So around 4,000, let's say 200. I don't know. I had different statistics here, but what if you withdraw essentially 1,700? Right? So immediately, your $500 is more than tripled in profit on the following month, which means your starting point now, right, is $3,000. $3,000. And $3,000, again, not ideal statistics with crappy days. You're aiming for 10%. If you lose, you stop. And this is the most beautiful freaking thing. When you see and understand the numbers behind this, I'm so excited to actually, to give this some attention with you guys. Hopefully you see, as many of you can see this and share this with people, please. Get on the Telegram channel if you got any questions about this topic, because this is like the meat and potatoes, all right? That's the foundation of trading into money with binaries, right? So we're talking on the third month, we're talking about 11,585 profit. And so essentially, if you withdraw 3,500, right, in profit, doubling, more, essentially doubling, more than doubling your previous months, you're left with 5K, right? Is my math right? About $5,000, right? So now, right, $5,000. Now we're talking about $19,000 balance on the fourth month. Who's not going to be freaking happy with that, right? And this is like, as I mentioned, if you're trading approximately 15, minutes or half an hour, or maybe an hour a day, so anybody can find this time. This isn't something where you have to sit in front of a computer for like 5 hours. That's unrealistic. So what can we ask from this asset? That in 4 months, you're going to have in 1 month worth of about hour trading, so about 20 hours out of a month, you're looking at 20K, approximately $20,000 balance. At that point, withdraw 13K, and you know what? This is where today because I'm working for myself, right? Because I'm not working for a particular broker and pushing their interests. I'm gonna get the red pill. If I give you $1 million, my dear friends, you're probably not gonna deposit in a pocket option and start trading binary options for your daily, monthly, yearly income. So for your financial independence. If you all of a sudden get a bunch of money, like $1 million, you're probably going to invest into a bunch of real estate around you. You're probably going to buy a bunch of real estate across around the world, right? Dubai, Bali, something, certain projects, maybe a part of a hotel, right? Where you buy certain rooms and the hotel rents them and you get the money for that instead of, right? So there are programs like this and there are things that you could consider like that. Now, the point what I'm trying to make though is that three things are always going to be in demand. No matter if you're poor or rich, you're going to need food, you're going to need medicine, and you're going to need a place to stay, right? So it doesn't matter if you're in like the slums somewhere, you still need a place to stay. Or if you're like in a penthouse or like a very affluent person in Tokyo, in Moscow, in Dubai, you still need a place to stay, right? And the Earth population, it's not shrinking. I'm sorry, we're expanding. This is something that's always going to be in demand. That's why I mentioned it. But obviously, if you have $1 million, maybe a bunch of real estate, maybe some cryptocurrency, maybe some stocks, maybe some indices, maybe some mutual funds. But, when you think about how you would have invested $1 million, you're not going to really think about binary options as a, kind of top two, three, four. So this is the instrument that can help you get to those places faster. But this is where we see a very, very important plateau. You see, I talk to people from India. I understand that approximately $500 USD, $500 is approximately enough to have a bare existence, right? You could rent you can rent in a place to stay with that. You can buy food for a month, internet, maybe even certain entertaining factors. In Russia, Russia is the same thing. My wife is Russian. So we travel, but once in a while we go back to Russia. About $500, $600, $700 a month USD. It's enough to live very, even in like big cities like St. Petersburg or Moscow, you can live on this amount of money quite, I don't know, not extravagant, but comfortably, right? Where all of your basic needs are met. So when we have, let's say, $100,000 balance, opening a 1% position, you're actually looking at opening like 2 months worth of living expenses in one go. It's incredibly risky. It's psychologically stressful, right? Because you understand if you lose $1,000, your next position will need to be two. And it doesn't matter at that point if like 85% of all of your winning is done in the first three trades. You'll be, kind of shaking in your boots if you're opening a third position for $6,000 because now you're thinking, holy crap, I've just wasted a living budget of over a year worth of living. All right, so if you went to open $1,000, that's 2 months worth of living. Then you open $2,000, that's 4 months worth of living. And then you open $6,000, which is essentially a year worth of living expenses in certain countries. You're not going to open for 1%. This is the truth. This is too scary. Nobody has that kind of psychological fortitude because we understand no position in trading binary is guaranteed. Please understand that. Even if you have a 99% success rate, there is that 1% that you will get like 6 losing trades in a row. There is that position. Right? That's why we never take fourth or fifth without seriously considering the consequences. Right? In terms of steps of martingale. So this is why we can aim for 10%, which is actually still quite demanding from this instrument because you would need, if you get like 4 signals per hour, you would need to go either very aggressively or you need to spend crap load of time in front of a computer. Sometimes that's not realistic. So even if we go back to, right, this particular, and we put down here instead of 10%, we put down 5%. Right, with the same statistic, 5 days not trading, couple of crappy losing days, worth of 10% actually. Here we got statistic. But yeah, 5,000 still becomes 12, and see, over 100% profit. Nowhere in the world your traditional investment will match this kind of growth. No bank will give you these kind of terms. That's why we need to understand, what we're, so be happy with 5% growth. It's still going to equal more than what you can make it, essentially traditional investing in 1 month. Be very excited about 10%. If you got more, fantastic, right? And this is where we're going to continue to educate you in terms of how different approaches are going to be opening these opportunities for you, right? But always factor in time. And when you reach a certain profitability, right? So we had the 10% here, right? For this particular statistic, 5,000 becomes let's say, right, 14,300 profit, or essentially 19,000, right? You know what? Withdraw 14,000 worth of profit, right? Or 13,000, let's say, like it is here. When you withdraw this, what do? Close your, I don't know, close one of your credits, right? Or, overpay on mortgage. That means that on a monthly basis, your payment that you need to get out of pocket shrinks significantly, right? On the following month, maybe you can close your mortgage. How freaking awesome is that? Is that in 4 months, 2 months worth of your attention, with nothing changing, statistic being exactly the same as is shown, you're going to be closing your mortgage. How freaking awesome is that, right? Or to close the loan to your car, right? Maybe upgrade to a better car. I don't know. I mean, I'm a car guy. I love cars. Cars are like people to me. They have personalities and everything. Anyways, but after that, when you make on the third month, you make another 13,000 or 14,000. You know what? Buy an apartment next to you. Make that 14,000 as the first down payment. I'm pretty sure that even if it's $100,000 apartment, you can put somebody in there and have them pay off the minimum monthly payment. So just buy an apartment and forget about it. Open the, get that 1 month is like 14, 15,000, first time, first deposit, and then you get your monthly payments, and you just pass that along to somebody, one of the tenants that's going to be living there comfortably, one of your buddies or maybe family members helping out with that, and have them raise your capital every single time. Every single month, they're going to be making an installment, and the profit of, or rather the value of that property is going to be slowly edging into your favor, right? So, and if you do that several times, so that's how you build your financial independence, my dear friends. Very, very important, understanding of this. What can we ask from this instrument? We can expect very, very impressive growth over the course of a month. Over a course of several months, you're going to be, staggered really about how you go about your profitability. Obviously, you can, instead of investing $500 and then, that's it one time, and growing that over time, over 2, over 3, over 4 months, withdrawing partial profit every single month, allowing your balance to grow. Nobody says that you're going to substitute this with your daily job. So at some point on the following month, you can invest a little bit more, and you can invest a little bit more, or you can actually just maybe, I don't know, you got some savings, you invest $5,000 right away, and that means that in 1 month, when you're asking the right things from this instruments, when you understand the specific numbers where you can stop trading, right? So you hit your stop loss statistics. That's it. You lost, you stop. When you understand the patterns, right? Last week we done a whole bunch of videos about support and resistance levels to understand where key interest points are, whether with Fibonacci or whether you're doing it by yourself, setting support and resistance. 3 times it touches a level, it's a level of resistance, it's confirmed level of resistance or support, which means the 4th time it comes to that point, it's that's where your other indicators confirm whether there's enough momentum for it to break and continue, whether it's enough momentum to break and continue for a particular amount of, like a size of the movement, how quickly it goes to that size of the movement. There's lots of information that's given. You need to be able to have the ability to analyze this, and within this analysis, you'll understand the probability of a particular move. Based on that probability, you can open a 1% position of your balance or less, right? You got $100, well, it's $1 to $3, 1 to 3%, right? Depending on weak, medium, or high strength signal, right? Or probabilities, the higher probability. But if you have $1,000 balance, nobody says that you need to open a position for 10, 20, or $30. All right. The bigger money that you have, the more steps of martingale you'll receive before you threaten the entire balance. But as I keep saying over and over again, you need to kind of calculate your statistic to understand what step martingale. What if in the first three steps of martingale you get like 60% of winning, but if you add the fourth step, it goes to 85% out of all of the trades. That's pretty freaking cool. I mean, I would adjust everything to be able to fit still within the 5 to 10, percent loss that you would establish for yourself personally. I would massage the numbers between the multipliers, between the first investment, between the balance. If you understand that, hey man, my balance doesn't allow me to have the fourth step, but I need that fourth step to improve my statistics, then wait, gather some money, save up, and bring it up to that point where you will be able to make money. Make that fourth step and risking only 10%. Don't rush. If you want to trade with me live, it's possible also. Henry and Donald do it all the time with me when we get together within our course, there's something that we discuss one-on-one as well. This is something that, it's available to anybody who's watching this video. You are able to trade with me one-on-one without any kind of fake stuff, right? So I even don't like the word trader. Uh, as much as, I consider all of us and Henry and Donald, we're investors. We need to calculate the amount of risk. We need to calculate the amount of profit, see if it's something that we're able to be comfortable with proper money management. Everything, anytime you invest, there's still a risk. You invest into a friend's business, it has a chance of closing down, right? You invest into stock market, into a particular big company, yeah, you're running a risk that somebody will sue that company and take a whole bunch of money, and you will lose a bunch of money. And if you take out, you can take out the loss. But if you just, hang with it, maybe it's going to go back up over time. Sorry. So over time, this is something that's important. Anyway, even if you invest into a government bond, which will give you barest advantage over inflation, you're still running a risk that the country can go bankrupt. Right? Who heard of Moldovan lira? I think Moldova, it's a tiny country between Ukraine and Romania. They're pretty much damn near bankrupt. Nobody really buys their currency to go around the world trip. Nowhere in the world is it accepted, really, other than within that particular country. All right, so yes, the government can print money. Yes, they can give you what they promised. You give me 1,000, we'll give you 1,200 in 5 years, and this is barely above inflation. You can do that. So they'll always be able to print and return their debt, but if they print money, the value of that currency becomes obsolete. We've talked about supply and demand principles. This is what determines the value of everything. This mask, this microphone, my lunch, my haircut, which you can see is stylish. This is all determined based on supply and demand principles. Why is one barber costing like $25 to cut your hair, but the other one is 100, right? Because the demand for the one with the 100 is higher, right? And this is essentially what determines this. Anyways, having said all of this, today's summary of today's conversation of education is that what can you ask from binary options? Can you ask for your $500 to turn into 5,000 in one day? Yeah. Is it smart and logical? No. This is not trading, it's gambling. Right? Because we've explained the way martingale works, because we've looked at how many signals you could be asking from the instrument. If you're trading with the approach like I've shown you a couple of times at the end of the candle, right, then yes, maybe 15, 20 minutes, half an hour is something that would be enough. But sometimes this is not for everybody, right? And sometimes you're very comfortable with, looking at the graph where you might get 5, 6, 7 signals per hour, right? Which means that investing 1% at that point means that you would need to stay, which is already risky enough. You would need to be in front of a computer for like 2, 3 hours. That already exceeds certain people's um, abilities. So you either need to, to fit into your 1 hour, 7 signals. If 5 of them are in the money, which is great statistic, or even 4 of them are in the money, it's still great statistic, but it's not going to give you 10% profitability if you're sticking with 1%, which is already could be risky enough. If your balance is like 10,000, you open $100 position, it's scary, especially if you live in countries where like your monthly salary is like 5, 7, $800, right? So opening that first position, so you would need to take that risk. It's psychologically stressful. That's all I'm saying. So you either need to be like, oh man, I need to sit in front of a computer longer, 3 hours, or I need to go more aggressive. And this is where most people can handle the stress. This is where most people will lose their balance. So today's lesson is not very exciting in terms of charts and everything, but I've probably given you the most important thought to consider when you're trading with binary options, right? So again, the most important thing is to know what you can ask from the instrument. What kind of goals you have. $5,000 per day. Great. In approximately 6, 7 months. If you're asking for this to happen snappy and right away, this is where cross that line from trading into gambling. All right. And maybe luck will be on your side, but most likely it's not going to last, even if it kind of goes with you for getting your 500 to 1,000, 1,000 to like 2,000. At some point you're going to get you're going to crash. This is way too aggressive. So my dear friends, once again, let me clarify: logic, math, statistics, all of that application in proper format, you are able to make more money very, very fast, more than any other traditional investing. But remember that millionaires don't put all of their money in one thing for growth. And when it does bad, they take it out and hide it under their mattress. First of all, they diversify into negatively correlated assets that generally grow over time. And it's not only one thing. That's why no millionaire or billionaire ever done that. Put all of their eggs in one basket. Binary options is a fantastic instrument that can give you massive profit, but you need to understand that it's not the only thing that's going to answer all of your financial questions. Right? If you want to discuss this, further with maybe different examples, with maybe applicable to you specifically, reach out on Telegram channel that's posted in the, under the video. To go onto the pocket option actually tomorrow. Wait a second. Let me clarify. Tomorrow, where's my mouse? There we go. All right. So tomorrow we have. One second. We have, according to our schedule, which is also posted in the Telegram channel, we have a very, very interesting live stream with a look at ADP non-farm, Advanced Data Processing non-farm, which is going to happen like at 15:15, I think, somewhere around there, 15:15. And we're also going to touch base on Canadian interest rates. The central bank is going to, so far according to our schedule, central bank is going to say whether they're going to increase, decrease, or let's actually take a look. One second. One moment. All right, let's kind of look at this together, right? So today, or rather, let's go for this week. There it is, apply filter. All right, so tomorrow, Wednesday, 3:15, right? 3:15 GMT plus 3 time. We're going to have it. It's a little bit earlier than, actually about an hour earlier than we started today. ADP non-farm. It's advanced data processing, right? Automatic data processing. For some reason, I always thought it was advanced data processing. Okay, automatic data processing. Inc. It's a company. It's an HR company that has approximately 400,000 small businesses that they do hiring for, and they post statistics. So they say that it's going to be higher. If it's going to be higher than 111,000 people getting their first job, getting hired, that's good for the economy. And then we're going to touch base on Canadian rate statement, or well, essentially state overnight rate, which is the interest rate, 2.75. We'll see if it's going to be higher or lower. And if that's the case, this has massive impact on the Canadian economy. And this is something that we will see in the real market with, not OTC, but real market. And this is, as close as it comes to my proof. Market is not chaos. I'm telling you right now that there's going to be an impulse on euro dollar. Real market tomorrow at 15, where is it? 15, 15:15 or 3:15 p.m. And about an hour and a half later, we are still going to be in live stream, live format, seeing what kind of impulse we can get from Canadian overnight rate. In the process, while waiting between this, I'm going to show you, we're going to trade tournament tomorrow. Pocket option has a wonderful kind of ability to put money into your pocket every single day. There's a daily tournament every single day. There's 3 winning spots for $50, $75, and $125. And I'm going to show you, right, which essentially what we've already discussed, but we're going to trade together and see if we can get our, tournament balance, which is, once again, risk-free. So every single day, if you open an account through link below, you make a deposit for like $50, you'll get access to tournaments. And at that point, you don't have to even trade with $50. You can trade just in tournaments every single day until you test what we discussed. And maybe out of 30 days, what if you win like, I don't know, 10 times, right? So out of 10 times, you just win the third spot. You got $500 in your pocket. And at that point, in the following month, you're able to, put the thoughts that we've discussed today into action, proper money management, and progressing that $500 progressively throughout the course of a month to something beautiful and lucrative. All right. So, my dear friends, I'm looking forward to speaking to you tomorrow. Tomorrow I show you how to win tournaments. We do that together. We're going to touch base on 2 fundamental events. We're going to talk a little bit more about this. So please stay tuned. Leave a comment. Of course, subscribe. It would mean, it means a lot to us. Check out Pocket Option. And once again, if there's any kind of questions about anything, money movement, I work for several brokers, and I can tell you the ins and outs, even from the inside. So touch base, reach out, leave a comment. Always going to be on your side. Morpheus out.